What's up guys, Bill here. In this video, I'm going to revisit trading SPY intraday for scalps using Fibonacci retracements, okay? This is a strategy that a couple years ago was a big part of my day-to-day trading, but I didn't use it as much in 2024 because the market was very strong and kind of trending upwards, and there really weren't that many big pullbacks on the daily time frames. We didn't have a single 10% correction, which is very rare. And intraday, there wasn't as much volatility, so I was more focused on swings and longer term time frames and things like that. I didn't do as much scalping and day trading on the indexes. But now, as we enter 2025, with a new president, there's a lot more intraday volatility just based on the fact that he likes to tweet a lot and talk about tariffs and things out of nowhere. And it causes a lot of pops and drops in the market. It makes things less uncertain, less smooth. A lot of breakouts fail or need to come back and do quick retests and things like that. And for intraday action, it can be really helpful to use these fib retracements to find good entries instead of trying to play breakouts. You know, every environment is different and there's different strategies that thrive in different environments. And I've been noticing the last couple weeks, especially, that these fibs and the way I trade them have been really reliable. So I'm going to go through all of last week's price action on SPY and show you how I did and would trade using the fib retracements on SPY. And this can be applicable, to any stock really. I mean, especially if it's liquid, you know, the Mag 7 names, anything like that, you know, similar price action to the indexes, okay? So we're starting here with Monday. I'm going to go through, show you the basics, but I'm also going to talk about different nuances to keep in mind when you're trading this, because not every strategy is just black and white. You know, if you really want to increase your win percentage and, you know, consistency, you got to add nuance to your setups and know in different contexts how to alter them a little bit to take advantage and just get the best result possible. So here we start on Monday, and what I'm looking for is the first major price leg of the day to draw the fib. So we start off the morning selling off, right? And some would say, well, here's your first price leg. Okay. The first area of nuance to talk about is what is a good size price leg? To me, it's approaching or above $3, right? Anything below that, I've found that you're more likely to be entering in to a period of chop without realizing it. And the levels will not be as respected because you haven't really established a true trend. So as we can see here, if I drew the fib on this first price leg, it's not even $2. It's like $1.40. Okay. So you would have tried to short here on the pushback into the golden zone. From the 50 to the 786 is considered the golden zone. I like to get in the middle of this zone to then play the reversal, right? But this isn't a big enough leg. It's not even $2. So I avoid those. And as you can see, price just rips right through and does not respect the levels at all. But then we get a leg up. So let's draw a fib on the leg up, and we'll see that it's just under $3. Okay. So this works for me. I'd be looking at this for a move back in to the middle of the golden zone, the 618, for an entry. And if you hop in at the 618, what you're going to do is your risk is a close below the 786 on your time frame of preference. I'm on the 5-minute right now. That's usually what I trade on for scalping intraday on the indexes. And as we can see, we come down here, we wick off the 786 a couple times, and then we make a really nice move and make new highs on the day. A successful trade. A big win on 0 DTEs, that $2 move there. All right, let's go on to Tuesday and check out another instance here. We can see off the open a real strong candle, some consolidation, and a move higher. So here's your first leg of the day. That is about $3 again, just under $3, and that's fine. I just want it to be close to 3. Anything where you're hovering on 2 or under, I'm going to avoid. It's most likely going to get you chopped up. But as you can see here, we have a nice leg that's close to $3. We sell off. We come down into the middle of the golden zone. We're taking entry here. We never lose the 786, and we get another nice move up that makes a new high of day for another win. All right. On Wednesday, we had CPI. This is another nuance to fibs. When you have big action in pre-market, so it's going to be something like a CPI print or other economic data, or maybe there's some crazy news or something like that that causes a big rip or a big sell-off. One thing you can do is incorporate some of that price action into your first leg of the day, okay? So we can see here that we make a low in pre-market and start to push back up, and then the market opens and we rip, right? You can use this to your advantage to draw your first fib of the day. See, over $3 of a move here. We pull back. We hit right at the 618. We're taking our entry and a nice leg up for a win, okay? And then, even if we didn't want to use the pre-market price action, it's still more than $3 of price action, and it comes right down to the 618 and holds. All right? And then there's another leg up, and you could draw another fib, and price comes back. Where does it come back to? The 618, and makes another high. All right? So that was a great day for fibs. A couple wins, a couple different ways, just depending on how you want to incorporate the price action. I normally do not incorporate pre-market price action except for when there's a big event in pre-market. Okay, so that's what I'm talking about with nuance. There's going to be certain situations where you're going to want to change slightly your approach to increase, the likelihood of things working out for you. And now we're all the way down to Thursday here. Obviously, this is our first leg of the day, right? Pretty clear. Whoops. Wrong shortcut there. This is a little over $4 of price action. And here's some more nuance, okay? Anytime within your golden zone, if there's other major levels that you're watching, so examples would be like Gex levels, dark pool, maybe it's opening range high or low, previous days high or low, or just kind of your standard pivots or daily and weekly support or resistance levels that happen to have confluence with your intraday fibs. That's a bonus. And you can enter in around those and play off those when they're pretty much near where you would get in anyway. This day is a great example of that. We can see that just above our 618 is this 605 level, which is a large negative Gex level. So in a situation like this, when this first price action leg happens and I've drawn my fib, I will notice, oh, this big Gex level's right here, just 16 cents above the 618. That's where I'm going to get in, right? I'll get in a little bit early and use this confluence of the Gex level, okay? And as you can see, when we pull back, we bounce right off that 605, okay? And then, again, another nice win, making new high on the day and just trending higher all the way into close. Finally, we have Friday. And Friday is going to be the best example of why I want to see price action legs of around $3 or higher, or I disregard it. This was the ultimate chop day. And if you start drawing these legs, shorter, you can see here, high a day was basically 611. Low a day was 609. The entire day was only $2. Okay. So if you were getting a little kind of like impatient and you're like, oh, you know what? Here's our first leg of the day. I'm going to draw this fib. I'm going to get in at the 618. And, maybe you even got a win on this one. But it was a tough one because look how low that wick goes. If you could have stayed in, on the 5-minute by waiting for that close of the 786, but you can see our range is tiny. It's a little over $1. And a lot of times when you play these, you're going to get chopped. You know, you could have drawn that one and actually probably won, but you would have been sweating it. Probably down like 60%, 70% on that wick, on your zeros. And that's what I play when I do these is zeros. You could look to draw this fib here and say, I'm going to short this. And you would have taken a loss on the close above. Then maybe, you're a little more patient and you even think, wow, well, this is a pretty big, leg down. So I'm going to draw that. But still, remember, our entire range of the day isn't even $2, right? So even though that looks like a lot of price action, this day's range is very small. And so we start to push back. You would take your entry at the 618, and then you'd get stopped there on a close above the 786 for another loss. So this is why I wait for the $3 because, you know, the first leg of the day, you don't really know what's going to happen the rest of the day. But what I've found is if your first major leg of the day is small, it's $1, it's $2, whatever, then it's much more likely that the rest of your day is going to look like this as opposed to this. Okay. So that's, you know, why I use that rule. But this is the intraday 618 strategy, guys. It's, you know, it's not something that I use all the time. Like I mentioned last year, I didn't use it as much. The environment was a little different. It's, you know, it's changing now again. And I'm noticing that, price is really respecting these fibs and they're making for great intraday little quick trades, right? Little bounce reversals. On the indexes, it's working on individual names as well. So hopefully that helps. If you have any questions about this, just leave a comment or reach out to me on Twitter and I'll help you out.